My name is Tamsin. I'm 31 years old, and until 2 years ago I worked evening shifts at the Loblaws on Ontario Street in Mississauga, scanning groceries and bagging frozen meals for people who never once looked up from their phones. I didn't mind it, honestly. The routine was simple, the staff were kind, and the commute on the 19 bus was short enough that I could get through a full chapter of whatever I was studying before my stop. Everything changed at my uncle's Christmas dinner. He lived in a detached house in Brampton, the kind of neighborhood where every driveway had 2 cars, and the holiday lights were on timers. My uncle had built his real estate development company over 20 years, condos, mostly, projects scattered across the GTA, his name on the signboards outside construction fences. To the family, he was the one who'd made it. He paid for dinners, he gave cash gifts at graduations, he told stories about square footage and pre-construction sales the way other people talked about the weather. I was the last to arrive that December. I'd come straight from a closing shift, still in my work shoes. My cousin, my uncle's son, 2 years younger than me, was telling the table about his new title at the company. Project coordinator. My uncle beamed. Then he looked over at me, still unwrapping my scarf by the door. He raised his glass of wine and said, loud enough for everyone in the room to hear, "I told your mother," I said, "send her to university so she can build something. I didn't say build someone else's cashier queue." The table laughed, not everyone. A few people went quiet, but enough. My aunt laughed. My cousin smiled at his plate. My mother reached over and touched my arm the way she always did when she wanted me to let something go. I smiled, sat down and ate my dinner. What nobody in that room knew was that I had completed my CPA preparatory courses 6 months earlier. I was 3 weeks away from passing my final examination. And I had already been offered a position on the commercial lending team at one of the 5 major Canadian banks. A position that started the 2nd week of January. I didn't say any of that. Some things aren't worth explaining before they're ready to be understood. Growing up, my uncle had always been the benchmark. My mother was proud of him in the way that families sometimes redirect their own ambitions into a sibling's success. She never said I had to be like him, but she measured things by him. Your cousin already has his G2. Your uncle started his first company before he was 30. These weren't criticisms, they were just the shapes of what success was supposed to look like. When I finished university with a business degree, I took the Loblaws job because a position I'd applied for fell through, and I needed to cover rent while I studied. I told my mother this. She told my uncle. He'd apparently said something along the lines of, "That's fine. Some people need a slower start." He meant it kindly, probably. That was 3 years before the Christmas dinner. At the bank, I started in February. My role was on the commercial real estate lending team, focused on construction financing. It meant reviewing applications for large residential and mixed-use developments, projects that needed tens of millions in credit before a single unit could be sold. I was the analyst. I ran numbers, I drafted risk memos, I sat in the back of presentations and answered questions when senior lenders pointed at me. I never told my family what I actually did. My mother knew I worked at a bank. When she asked what that meant, I said I worked in lending. She nodded and said that was very stable, which was the highest compliment she knew how to give. That spring, 9 months after I started, a file landed in my team's queue. The company name was familiar before I even opened the folder. It was my uncle's development firm, based in Brampton. They were requesting emergency construction financing, $12 million, to complete a stalled residential project in Mississauga. A 12-story condo building. Pre-sales begun in 2021. Construction started in 2022. The Bank of Canada had raised interest rates 8 times since then. Buyers who'd signed pre-construction agreements were pulling out. 2 major subcontractors had filed liens. The general contractor was threatening to walk unless they saw payment within 30 days. I read the first page twice. Then I set the folder down, got up, poured myself a cup of coffee from the break room, and stood by the window for about 4 minutes, watching the traffic on Bay Street below. Then I went back to my desk and kept reading. The numbers were not good. Revenue projections had been built on a market that no longer existed. The rate environment had completely changed the math on pre-sales. Out of 148 units, 41 purchasers had exercised their rescission rights under Ontario's new construction condo protections. Another 23 files were showing signs of strain. The company had burned through its contingency reserve and was now servicing existing debt on shorter runways than the original loan covenant had assumed. What made it complicated wasn't just the financial exposure. My uncle had been operating this company for over 2 decades. He employed project managers, site supervisors, administrative staff, a small in-house accounting team, dozens of people who had spent years building careers alongside his. The subcontractors alone represented another wave of smaller businesses, electricians, framers, drywall crews, who were waiting on payment to cover their own payroll. I requested a full documentation package and began the review. 3 weeks into it, my mother called to say the family was doing an early Thanksgiving dinner at my aunt's house in Etobicoke. She mentioned my uncle would be there, that he'd been stressed lately, that it would be good to have everyone together. I went. We were on the back porch after the meal, my uncle, my cousin, 2 of my aunts, and me, when my uncle looked over and asked, in the casual way he asked most things, "You still at the bank?" I said yes. "What do you do there exactly?" "Customer service." Before I could answer, my mother said from inside the screen door, "She does paperwork, loans or something." She said it warmly, the way she always tried to smooth things over, like my job was something mild and harmless, like a filing cabinet with a salary. My uncle nodded once. Stable work. Then he turned to my cousin and asked about the Mississauga project timeline. I stayed another hour and drove home on the 427, and somewhere around Rexdale I let myself think clearly about something I'd been pushing aside. My family had spent so long building a picture of who I was that the actual me, the one sitting inside a bank 12 hours a day reviewing multi-million-dollar files, didn't fit the frame. Updating it would require admitting the frame had always been the problem. Most people don't do that voluntarily. Back at work, the review continued. Our team visited the Mississauga site on a Tuesday morning in October. The building was about 60% complete, floors poured, exterior walls up, mechanical rough-in underway. The site foreman gave us a walkthrough. A few of the tradespeople thought they recognized me from some family event years back. I didn't correct them. What I heard on that site matched what I was reading in the files. Materials had cost significantly more than projected. Concrete, lumber, and steel had all spiked after contracts were already signed. My uncle had chosen not to renegotiate with the general contractor or approach purchasers about cost-sharing arrangements, which some developers had done. He'd believed the market would recover fast enough to absorb the losses. It hadn't. That weekend, my cousin called. He didn't open with the loan. He started by asking how I was doing, how I liked the bank, whether I was seeing anyone. We talked like that for about 10 minutes. Then, quietly, he asked whether banks ever gave special consideration to borrowers with family connections inside the institution. I explained that major commercial decisions weren't made by a single person. They went through credit committees, senior adjudication, risk and legal review. I told him I evaluated files. I didn't decide outcomes on my own. He said he understood. There was a pause on the line, and then he added, "There are a lot of people working on that site." I knew. I'd met some of them. A few days later, my uncle called and asked if I could meet him for coffee. We sat at a Tim Hortons in Meadowvale. Not because either of us particularly wanted Tim Hortons, but because it was halfway between his office and mine, and I think he wanted neutral ground. He looked tired. Not defeated, but the way someone looks when they've been carrying weight they weren't designed to carry alone. He ordered a large double-double and wrapped both hands around the cup. He told me the project was struggling. He said it without dressing it up. He explained that rates had moved faster than anyone expected, that the pre-construction market had softened in ways no model had predicted, that he had made decisions that looked reasonable in 2021 and looked very different now. He didn't ask me to do anything. He didn't hint at it, didn't circle toward it. He just said quietly, "Do you think they'll give us a chance?" I told him honestly that the file was still under review, that the committee hadn't made a decision, that what I could say was that the bank took recovery potential seriously when the fundamentals supported it. He nodded slowly. He thanked me for meeting him. He left a few minutes before I did. Driving back to the office, I passed the Loblaws on Ontario. For a second, instinctively, I checked the clock to see if I was late for a shift. Old habits don't disappear cleanly. The credit committee met on a Thursday morning in November. The room held 8 people, 5 voting members, a legal advisor, my supervisor, and me. I was there to present the operational analysis, answer questions, and clarify assumptions. I wasn't there to vote. For 90 minutes, the committee worked through every dimension of the file. One member pointed to the company's long track record, its completed projects, its existing relationships with the city and with purchasers. Another laid out the cash position, the lien exposure, the thinning covenant cushion on existing debt. The Bank of Canada's rate trajectory was on every page of the projection. The conversation moved back and forth, and nobody rushed it. Halfway through, the committee chair turned to me directly. "You've completed the operational review," he said. "In your assessment, is this a business that can recover if the financing is extended?" The room was quiet. I knew what the comfortable answer was. I also knew it wasn't the honest one. "The business has real recovery capacity," I said. "The fundamentals are still there. Experienced project management, a partially completed asset with significant value, a purchaser base that hasn't entirely walked away. But recovering requires the company to operate differently than it has. The expansion strategy that made sense in a low-rate environment doesn't work in this one. If the bank extends financing, it needs to come with conditions that enforce a different discipline. Independent monitoring, restricted draws, no new project commitments until this one is delivered. Without those structures in place, additional capital delays the same outcome. It doesn't change it." Nobody responded for several seconds. The committee thanked me. I stepped out into the hallway with my supervisor while they deliberated. We stood by the windows that overlooked the lake. It was a gray November morning, the kind that felt like the whole city had put on a coat and braced itself. After 40 minutes, the door opened. The decision was approval, $12 million, with conditions. My uncle received the term sheet 2 days later. The conditions were thorough. An independent construction monitor would be embedded on the site for the duration. All draws required sign-off from the bank's risk team. Executive compensation was frozen until the project reached substantial completion. No new land acquisitions or project launches could proceed. Quarterly reporting directly to the bank's commercial credit team. He didn't call me right away. 4 days passed, then he asked if I was free for lunch. We went to a Greek place near his office in Brampton. Somewhere he clearly went regularly, because the woman at the front waved him over without waiting for a name. He slid the term sheet across the table, the same way people slide something toward you when they're not sure how to talk about it. "They don't trust me," he said. I looked at the document. "They trust the company," I said. "They don't trust the decisions that got it here." He was quiet for a moment. He straightened the pages on the table, even though they didn't need straightening. Then he said something I don't think I'll forget. "I kept thinking the next project would make up for the last one. I thought growth was the same thing as progress." It wasn't an excuse. It was just a man finally saying out loud something he'd been carrying around for a while. The company signed the term sheet the following week. Every condition, without negotiation. Construction resumed. The lien disputes were settled. Payroll held. The trades came back. Over the following months, the project moved toward completion, in a way it hadn't in over a year. I didn't hear much from my uncle directly after that. We saw each other at family events and talked the way family does. Surface things, updates, how the winter was treating everyone. But something had shifted in how he looked at me. Not dramatically, just differently. The clearest sign came from my cousin, who called one afternoon to tell me that my uncle had been at a real estate development conference in Toronto. One of those industry breakfast things at a hotel downtown, and someone had asked him about navigating the current financing environment. He'd apparently talked about the importance of surrounding yourself with people who tell you the truth when it's inconvenient. And then, my cousin said, he'd mentioned me by name. He said his niece had sat across from him at a Tim Hortons and told him things he hadn't wanted to hear, that she'd been the only person in the entire process who had respected him enough to be honest rather than comfortable. He never said that to me directly, maybe he didn't know how, but he said it in a room full of his peers, without being asked, without needing anything in return. I think that was the version of the apology he was capable of giving. About 14 months after the financing closed, the Mississauga project reached occupancy. The first residents moved in on a Thursday in January. Not a momentous occasion by any standard, just people carrying boxes through a lobby that still smelled like fresh paint and construction sealant. But the building was there. It stood where there had been an empty lot, and then a stalled skeleton of concrete. People who had spent 2 years waiting finally got their keys. My uncle sent me a text that day. "Just keys went out today, thank you." I stared at that for a while. He didn't mention the Christmas dinner. He didn't walk back the wine glass or the comment about cashier queues. I'm not sure he even remembered saying it the way I remembered it. Sometimes people don't carry the moments that broke something in you. They move forward and expect you to have moved forward too. I had, just not in the direction anyone expected. I was promoted to Senior Commercial Relationship Manager in the spring. My role shifted toward working with business owners earlier in the process, before they were in crisis, before the numbers had become an emergency. I met with developers, contractors, property investors, people who were confident and ambitious, and sometimes too certain of their own projections, to see the risks they were building into them. I recognized the look. I'd spent years watching it across the dinner table. Whenever someone came into my office certain that bigger was automatically better, that more projects meant more stability, that the market would keep moving in only one direction, I didn't argue with them right away. I let them finish, and then I asked questions. What does your cash reserve look like at month 4 if 2 draws are delayed? What happens to this forecast if rates move another 50 basis points? What's your plan if pre-sale targets aren't hit? Most of them hadn't worked through the answers. Not because they weren't smart, they were. But because nobody had ever made it comfortable to sit with hard questions before the hard questions became emergencies. That was what I could do. Not in spite of the years I'd spent scanning groceries and riding the 19 bus home with a textbook in my lap, because of them. I went back to the Loblaws on Ontario one evening that following fall, on my way home from a site visit in Port Credit. I wasn't shopping for anything in particular. I pulled into the parking lot and sat in the car for a minute first, looking at the entrance. Inside, it looked almost exactly the same. Same layout, same refrigerated smell near the produce, same self-checkout machines in the corner, with at least one lane showing a flashing yellow light. A woman was running the express cashier, someone about my age, moving through a line of customers with the kind of quiet efficiency that only comes from doing something over and over until it stops requiring your full attention. I bought a bag of coffee and some bread and walked out. Sitting in the car afterward, I thought about my uncle's Christmas toast. About the way the table had laughed. About how I'd smiled and put my coat on the chair and sat down and eaten my turkey like it hadn't mattered. It had mattered. I just didn't let it determine what came next. The job I'd held in that store had taught me things that no exam had ever tested me on. How to manage a situation without reacting to it. How to stay steady when the people around you aren't. How to remember that the person across from you is a person, not a transaction, regardless of how much money is involved. Patience. Precision, the ability to hold your ground without making a scene. Those weren't soft skills. Those were the whole job, dressed in a different kind of uniform. My uncle eventually scaled back. Not all the way, he still had projects running. But he brought in a CFO for the first time in the company's history, someone external who would tell him no when no was the right answer. My cousin told me that change had been harder for him than any of the bank's conditions. That surprised me, and then it didn't. I still see my family at holidays. We don't talk about the loan directly, the way you don't talk directly about a lot of things that matter in families. But when my uncle introduces me now, he doesn't trail off or redirect. He says, "She's in commercial lending at the bank. She's very good at it." It's not an apology. But it's the truth, said plainly. And I've come to understand that those two things often arrive in the same sentence, when people finally start talking honestly. A few months ago, a young woman came into my office for an informational meeting. She'd been referred by a colleague. She was finishing her CPA and trying to understand what a career in commercial lending actually looked like day to day. She had questions written down in a notebook, organized by category. I liked her immediately. We talked for nearly an hour. At the end, almost as an aside, she mentioned she'd been working part-time at a grocery store while completing her designation. She said it in the apologetic way people say things they're not sure they should have said. I told her I had done the same thing. She looked at me like she wasn't sure whether to believe me, and then like she very much wanted to. I told her the only part that matters, in the end, is not how other people describe what you're doing while you're doing it. The part that matters is that you keep going, and that when the moment finally comes, and it always does, you know exactly what you're looking at. Before you go, think about the person in your life who measured your value by the wrong thing. If this story brought someone to mind, share it with someone who needs to hear it. And if you haven't already, subscribe. I'll see you in the next one.